Welcome to everyone. We are following this book, that means Oigan Kaiso Kimmel books. This is Accounting Principle Books, 12th edition. Today's lecture on fraud, internal control and cash. And this is the point number 3, that means learning objective 3. Identify the control features of a bank account. Next. This is identify the control features of a bank account. Here we need to be used a bank. The use of a bank contributes significantly to good internal control over cash. Keep in mind, everybody, that means for a good control we need a bank. That means we can deposit into our money into the bank. Here, minimize the amounts of currency on hand. That means our hand currency we can minimize. That means we can deposit into the bank. Number 2 creates a double record of bank transactions. Here creates a double record of bank transaction. Bank transaction double records means that means when we keep our cash into the bank, that times we record in the cash book and credit side, and in the bank book they deposit into in their credit side, and we keep in our debit side. Bank reconciliation, end of the year we or end of the month, or as per need, we do this bank reconciliation statement. Here please, making bank deposit, authorized employees should make deposit. Authorized employees, or not all employees, a specific employees or a particular employee should deposit this amount into the bank. Bank code number, this is the bank code number, and dollar cents, that this is the amount we can write down. And front side, this is the front side, and reverse side, that means this is the total amount. And writing check, how can we write the check? Just have a look here. This is the maker. Written order signed by depositor directing bank to pay a specified sum of money to a designated recipient. Maker, this is the maker. Laird Company, 77 West Central Avenue, Midland, Michigan. Okay, and this is the date, April 16, 2017. And pay, that means to whom we are paying this check. This is the name, Western's Wholesale Supply. This is the amount, dollar $1,525. Payer, National Bank and Trust. This is the payer, and this is the signature of stakeholder. Bank statement, here just debit memorandum, bank services, NSF, not sufficient fund, or credit memorandum, collected notes receivable or interest earned. That means in our bank statement, when we receive our bank statement, we can see this matter. That means debit memorandum, that means bank can do this job. That means bank services, how much services will be imposed, the bank can say this. So this is the bank services. NSF, not sufficient fund, that means that this is, we call the regional check or bounce check. Okay. Credit memorandum, collected notes receivable, that means bank can collect notes on behalf of the company. Interest earned, which interest earned, just this is by the bank, end of the year or end of the month, they can charge this they can provide the interest to our accounts. Okay, so this is the checks and debits, deposit and credits, daily balance. This is the date 4/2, number, check number this one, and amount this one, and total amount this one. And just after daily balance, this this on the daily balance, okay. And then uh, 4.3, this is another date. 4.5 and 4.3 the daily balance, this one. And end of the year, CM means credit memo, EC means errors correction, NSF not sufficient fund, DM debit memo, INT interest earned, SC servicers. Reconcile your accounts promptly. Bank statement. The control features of bank accounts do not include having bank auditors verify the correctness of the bank balance per book. Reconciling the bank account. The reconciling balance per books and balance per bank to their correct or true balance. Reconcile items, deposit in transit, outstanding sales, bank memorandum or errors. This is the for time lags this can be created. This is the reconciliation, the bank account reconciliation procedures, cash balance per bank statement per book, adjustment to the bank balance, adjustment to the book balance. Here deposit in transit will be added and outstanding sales will be deleted or will be subtracted. Not collected by the bank will be added, NSF or bounce check will be subtracted. A check printing to other services will be subtracted. So a bank per bank statement it could be error. So error may be plus or minus. The company error may be plus or minus. This is the correct balance. And next slide we will show this amount. Reconciliation procedures. How can we reconcile it? Please look here. Bank reconciliation illustrated. The bank statement of Lerit Company, illustrated 810. Show a balance per bank. This amount on April 30, 2017. On this date, the balance per cash book. This is the per bank and cash book. Now cash book. This amount. Using the four reconciliation steps. Let it determine the following reconciliation items. Deposit in transit, this amount. Outstanding check, check number 453, $3,000. Check number 457, this dollar. Check number 460, this dollar. And total $5,904. Errors. Let it wrote checks number 433 per 1,226 and the bank correctly paid the amount. However, let it recorded the checks 1,262. That means this is the correct balance, and but they have written down this figure. That means 36 taka more they have written. And bank memorandum debit. NSF checks from JR Baron. This amount. Credit charge of printing company checks. NSF checks, we know this is a not sufficient fund checks. And debit charge of printing or credit collection are not receivable. That means in our favor, bank collected this amount. And plus interest on that, interest on this figure and less bank collection this figure. So total this figure. Reconciliation procedures. Prepare a bank reconciliation at April 30. So this is the figure 50,907. This figure 15,907 as per bank, and this as per cash 11,989.45. This figure. Please look these two figures, and now deposit transit will be added. Route transfer will be deleted. The minus figure means this is the subtracted figure. And error check number this could be plus figure, and this could be minus figure. Bank servicer minus figure, and collection of noticeable this could be plus figure. So this figure and this figure the adjusted cash balance per bank. Adjusted cash balance per bank. Please look here the two balance are equal. Okay, so this is the procedure. So uh, we can adjust our cash balance per bank and adjust our bank balance per book. So collected note receivable. Now we made a entry, that means annual entry, cash or miscellaneous expenses and notes receivable. This is debit, miscellaneous debit, and note receivable credit, and interest revenue credit. Okay, and NSF check, cash debit, accounts payable credit. This is the book error. Or NSF check, account receivable debit and cash credit. And finally cash book, we can maintain a cash book 12,204.85. This is the cash balance. Please look here, 12,204.85, this figure, 12,204.85. So just this is the cash figure. Finally 12,204.85. Okay, miscellaneous expense, cash. Okay, reconcile bank account question. The reconciliation item of a bank reconciliation that will result in an adjusting entry by the depositor is bank service charge. Electronic fund transfers system, disbursement system that use wire, telephone or computers to transfer cash balances between locations. That means suppose this is a location and this is a location, between two locations we can transfer our fund. EFT transfer normally result in better internal control since no cash or checks are handled by company employees. Do it, and just you can look this example. This is very easy to understand, I think. Add to balance per book, original check, deduct from balance per bank, add to balance per bank. Okay, thanks to everyone for joining with us.